The AI models are screaming something huge about XRP right now, and honestly, it's kind of shocking what they're predicting. Let's break it down. So here's where we are right now, sweeties. XRP is sitting at $1.0037, up a modest 0.54% in the last 24 hours. Now, I know that doesn't sound earth-shattering, but you know what I've noticed? Sometimes the biggest moves come when things look the most ordinary on the surface. We've got about 31.72 million XRP in trading volume, which shows decent liquidity. But here's the thing. The price is still below those major moving averages, suggesting we're still in that medium-term bearish phase. Now this is where it gets interesting. The RSI is sitting at 33.98, which means we're getting really close to oversold territory. That's like a coiled spring ready to bounce back. The MACD is still negative at minus 0.0247, but here's what caught my eye. XRP is trading right near the lower Bollinger Band at $0.9891. When prices get pushed down to that lower band like this, well, they don't usually stay there very long. The 200-day moving average is sitting 22.83% above us, which sounds scary. But sometimes that just means there's more room to run up. Here's the thing about the bigger picture right now. XRP has this fascinating negative correlation with the dollar index at minus 0.6603. What does that mean for us? Well, when the dollar gets weaker, XRP tends to get stronger. And with all this economic uncertainty swirling around, that could work in our favor. Plus, there's a strong negative correlation with the S&P 500 and NASDAQ, which means XRP might actually benefit when traditional markets start pulling back. On the regulatory front, things are pretty quiet, which, honestly, that's good news. No drama means no sudden shocks. We did see some ETF outflows totaling about $12.3 million across XRP products. But you know what? The fact that these ETFs are operating normally shows we've got regulatory stability and institutional access. Sometimes boring is beautiful in the crypto world. The mood right now is, well, let's just say people are feeling a bit cautious. The Fear and Greed Index is at 34, which puts us in near fear territory. XRP search trends are moderate at 41, and that FOMO spread is super low at just 2.0. Now, here's what I've learned over the years. When everyone's scared and nobody's talking about it, that's often when the best opportunities show up. The big players are doing something really interesting right now. We're seeing 462 whale transactions processing nearly 21 trillion XRP. That's massive, honey. When whales are moving that much volume, they know something we might not. These aren't panic sells either. This looks more like strategic positioning. Smart money is definitely active at these price levels. In plain English, here's where we are in the bigger picture. The Elliott Wave analysis suggests we're in a C-wave correction, which is typically the final stage before things turn around. And the Wyckoff analysis? It's showing us in markdown stage B. Now I know that sounds technical, but basically, we might be in the final cleanup phase before the next big move up. Both of these methods are pointing to the same thing. We're near the end of this correction. So what does the AI think? Oh my, this is where it gets really exciting. The short-term model is predicting $1.5305. That's a 52.7% jump with 97.2% confidence. Wait, let me say that again. 97.2% confidence. The 7-day prediction is even more bullish at $1.5977, showing a 59.2% increase with 98.2% upward probability. Even the 30-day target of $1.5537 represents a 54.8% gain. When AI models agree this strongly, you really want to pay attention. But here's what could go wrong, and I always want to be honest with you about this. The biggest risk is if we break below that 98-cent support level. Also, those ETF outflows show institutions are still a bit hesitant. And if the traditional stock markets suddenly rocket higher, money might flow out of crypto and into stocks instead. These are the things that keep me up at night, but they're manageable risks if you plan for them. All right, here's my take, and I'm feeling pretty confident about this one. This is a conditional buy situation. The entry range I'm watching is $1 to $1.02. Set your stop loss at $0.985 to protect yourself. First target, that $1.53 level that AI is so excited about. Second target is $1.60. The risk reward here is beautiful, and with all that whale activity and those AI predictions, well, sometimes you just have to trust the signals when they're this clear. That's it for today, my lovely viewers. If this analysis helped you see the bigger picture, please hit that subscribe button and give this video a like. I'll be watching these levels closely and will update you as things develop. Take care of yourselves, and I'll see you in the next one.